And hello, everyone. Welcome to another power scanning session. It is May 24th, 2025. And once again, we will be on the lookout for the next and most interesting swing trading setups for the week and the weeks ahead. My name is Daniel Sinek, and I'm greeting you once again today from our beautiful office here in Montreal, in Canada. And before we get into it, let me ask you guys a question. Where are you calling in from? Who do we have in the room today? Please put your location into the chat box. Who do we have? All right. Edda from Hamburg. Hi, Edda. Nice to see you again. Mark from Birmingham, Alabama. Keith from the Scottish borders on the Scottish side. Awesome. Who else do we have? So we have Scotland, we have Alabama, Hamburg, we have Santa Fe, Gerald from Santa Fe. Hey there. Who else do we have? So please put your location into the Q&A box. All right, Gerd. Hi, Gerd from the Dutch border in Germany. Okay, great. Hi, Gerd. Good to see you again. All right, well, Larry from Maryland. Hey, Larry, how's it going? Nice to have you. Rajiv from Atlanta. Hey, Rajiv. Good to see you. Al from Memphis. Hi, Al. I did get your email this morning. I'm going to reply a bit later. Enrique from Venezuela. Wow. Well, that's the first, I think. Hey, Enrique, how's it going? Somebody from London. I guess that's London, UK, not London, Ontario. Jay from Nevada. Hey, Jay. Adam from Paderborn. Nice. Stefan from Spain, but he's from Hamburg. He's from Germany. Awesome. Thomas from the Black Forest. Michael from Dresden. Hey, Michael. Sam from Ontario, from Waterloo. P-Joy from India. Hey there. Oh, far, long distance. Toronto we have Tampa. We have Robert from Kentucky. How's it going? And Frank from Den Haag. Wow. What an international crowd once again here for our power scanning session. All right. So without further ado, let's get started. So a quick, contextual information. We will be looking for swing trades today. Unlike day trades, a swing trade typically takes anywhere between 2 and 20 weeks. So it's a longer term trade. And for these kind of trades, we will be using our awesome Liquidity View dashboard. And once you got the hang of it, you will be able to identify over the weekend the most interesting trades or setups within less than 13 minutes. So this is designed, or a dashboard designed, to simplify and speed up your trading life so you can find what you are looking for much faster in as little as perhaps 13 minutes. Now, of course, today is not Sunday. I'm aware of this. It is Saturday, but perhaps the idea is, as the weekend comes to an end, you want to sit down a little bit, perhaps after dinner, and, check out the market, see what is of most interest before the market opens on Monday, or of course, in case of this week, on Tuesday because of the holiday. All right, a quick reminder for those of you who are joining us for the very first time, we are tradingindicators.com. My name is Daniel. I'm the guy here on the left-hand side, and together with Homer here in the center, we have created trading indicators to build the most innovative trading products out there. And Liquidity View, our dashboard, is one such product. All of what we do is to simplify your trading life and not to make it more complex. And for this, we primarily use what's called technical analysis, which is basically a mathematical analysis of your price chart. We look for certain patterns, and we want to use this information to anticipate what may happen next in the market. Because let's face it, trading is all about kind of predicting the future, forecasting where price may go next, up or down, and how long price would take to reach its target. Now, with this, I also want to encourage you to ask as many questions as you can. Please put those questions into the Q&A box. The more the merrier. Also, if you have symbol requests, please put those into the Q&A box, and we're going to get to them as I proceed through this webinar. Okay, so a quick reminder that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. Okay, now I mentioned today's topic is going to be swing trading. But if we have any day traders in our crowd today, we recently published the recording of our last live trading workshop where we used the same indicators and the same setups, but for day trading. So if you're interested how this all worked out and how which trades we picked in a very difficult trading day, check it out on our YouTube channel or simply go to tradingindicators.com/live. And Niklas, please also put this link into the chat box. Also, if you already have access to our dashboard, perhaps are overwhelmed with all the different features, or perhaps are not certain how to use certain things or how to do certain things, check out our bootcamp at tradingindicators.com/bootcamp. It's completely free. And in there, we will explain every single feature of our dashboard. And as you will see, there are so many awesome features. You may not use all of them, but I think it's good to know what's out there. What are your options to find the ones which are right for you? Also, if you are not aware of our Discord channel, which is completely free, simply go to tradingindicators.com/Discord to perhaps ask questions, to contribute to our trading talk, to receive automated trade alerts, and so forth. So tradingindicators.com/Discord is the link for this. And lastly, what we are going to do today is to interactively scan for the most interesting setups using our Liquidity View dashboard. Now, it is best, or it would be best, if you were to follow along interactively as well. And if you do not have access to the dashboard yet, you can sign up right now. You will get instant access. You can sign up for a 1-week free trial of our dashboard. And all you need to do is to go to tradingindicators.com/view. Put your information there, sign up for the free trial. And of course, if you are interested in staying longer, we have interesting monthly and yearly options. And last but not least, we also have written a book on the setups that we will be discussing today. It's called The Power of Three. Why the Power of Three? Because we mainly focus on 3 different setups. Our bounce setup, our zone break setup, and our zone break retrace setup, and how all these setups work, and perhaps more importantly, why we think they are so powerful. Well, check it out in our ebook. It's completely free at tradingindicators.com/power of 3, and this link will also be in the chat. And lastly, if you have any suggestions or feedback or questions, please don't hold back. Most of what makes our dashboard so awesome and so great is because it incorporates all your ideas, all your trading needs in one place. So if you have anything else that you would like to see in the dashboard or suggestions on how to further improve them, please, by all means, send us your ideas and we'll try to incorporate these into the dashboard. I think the idea here is to create a tool which we all can use together as a community to find us something interesting to look at, and more importantly, to help us make more insightful trading decisions. With this, let's get into it. Let's look at the current market situation. So with this, I'm going to switch over to the dashboard. Let's drag it in right there. All right, so this is our Liquidity View dashboard, but of course you may know it already. And we're going to start off with the SPY. Boy, it's going to be an interesting next week. I'm telling you this right now already. Why? Let's have a look. Okay, something super, super exciting is happening. I think it's decision week next week when the market opens on Tuesday. What I'm going to do, just bear with me for 1 second. I'm going to draw a very quick line here just so you can see it. So this line here, and there's a reason for this. All right, so this blue line I've drawn. But if you look very carefully, and let me make this a little bit bigger here, you can see that also our liquidity IQ indicator has drawn this little red line. You see this little, very hard to see red line just above the blue line? It's there as well. So this red line used to be a support level. It was broken back in the day, March 5th. This support level was broken, and since it was broken, it became a resistance level. We can see it here. Price initially went down, went up again, and then resistance held and price really bounced off. All right, but that was a long time ago. Now, recently, a couple of weeks ago, we broke above this resistance level. And when resistance is broken, it becomes what? It becomes back to support. All right, so prices went up, it broke above resistance, turned up, and then all of last week, basically, it was a down week. So price came all the way down, to this level. And why do I say it's a decision week next week when the markets open on Tuesday? Because next week we will see if this support level, this blue line, is going to hold or not. If it's holding, if we are bouncing up further from this level, which is definitely a possibility, I think this V-shaped correction will continue and we're going to move towards the all-time highs in the SPY. But should it not hold? Should we break below it? Look at this huge gap here. Let me just draw this in a little bit using my drawing tools. Just a second. This huge gap that we had when markets went above this level. Now, should we go below this level? I think it is a distinct possibility that this gap will be tested or even closed. And for this gap to be closed, prices would need to come all the way down here, which is not that far away, but still, we're going to see this downwards move and this correction after this big comeback, this V-shaped move up might go a bit deeper. So big week ahead. We'll see if this level will hold or not. If it holds, we're going to go up. If not, I think prices are going to go down for quite a while, for quite a bit. Okay, that's the SPY. But let's have a look at the QQQs, the Nasdaq 100 ETF. As you will see, it's basically exactly the same story here. What do we see here? Well, we bounced above this resistance level, just like on the SPY. Prices went initially up, and then the correction down to the broken resistance level, now acting as support. Prices are right here, and we'll see also here whether this support level is going to hold, then I'm going to go further up, or it's going to close this gap, or it's going to go below and close this gap. So big week next week for these two symbols. But that's not the only one. Let's have a look at something we called out last week, gold. Oh boy, what a beautiful comeback. Now, what do we see here? Well, last week, and I believe also the weeks before, we have discussed we would love to see a correction in gold, away from these super extended price levels to a bit lower levels. And we've seen this exactly, and we said, hey, perhaps this is an interesting opportunity to scale into a long position in gold. And boy, were we spot on. Look how prices bounced off this level 3 pullback. You can see it here in our trend radar indicator. 3 levels down, level 3 pullback, and prices bounced up almost immediately. And we called it out. We said in recent history, just make this a little bit bigger here. In recent history, every single pullback in gold, you see these little red patches here? Every single pullback has been quickly bought up, and the overarching bullish trend is resuming. Every single one in recent history. And this is exactly what we saw last week, and it would have been the right call. Prices immediately went up in the direction of the overarching trend, which is a bullish trend. But of course, now we have to see what's going to happen. You can see it here, it's not very easy, not very hard to see, that we are approaching this resistance level. And we'll see if prices will bounce off this level. It is a possibility, or if we break above it, well, then we're going to have blue skies ahead. And I think another leg further up is definitely in the books. But also here, it will be interesting to see how gold reacts when it approaches this level. All right, so that was gold, but there was another symbol which made some headlines last week. Bitcoin. Oh boy, Bitcoin went to all-time highs. And you can see it here on my beautiful drawing, which I drew up last week. It might be a bit hard to see, but this was my beautiful flag pattern. So we had a bull flag here, which is a technical setup. A bit earlier this month, or in April, bull flag. And I said, hey, if we break above this bull flag, you see it here, then we're going to see a push up. And then we had this push up, and it formed once again a bull flag. And there was basically rinse and repeat. If we break above the flag pattern, this level here, then we're going to see a significant move up. And this is exactly what happened. We broke above it. Bitcoin made an all-time high, and now it's still in this area. We pulled back on Friday a bit, and Bitcoin. It's going to be interesting to see if this perhaps will be a more significant bounce. We are slightly above this resistance level here, now below, but we were above it, not too far away. So we didn't completely clear it. That's why there's no zone break arrow here. Or if we're going to see a bounce to the downside. If, however, we clear this level, I think the next stop will be probably by June or July, the $150,000 level in Bitcoin, as predicted by so many experts out there, because it would mean that Bitcoin would have tripled, as it's done many times in the past, since the last halving process. Halving in cryptocurrencies means that it became double or twice as complicated to mine Bitcoins. So this was a policy change that was made by the Bitcoin, I guess, organizers. And every time this happened, the halving was done. Typically, Bitcoin tripled within 18 months. And if this were to repeat itself, we will see levels of 150 or even higher by July or June or July this year. All right. Now, what else do we have? What about oil? Where are we in oil? Okay, the United States Oil Fund is typically what we are looking at for this. Let's take a look. Yeah, oil is range bound as it is. Yeah, we discussed it many times. Look at how Trend Radar picked up all these different ranging patterns here. All red's going to go to all green, back to all red, back to all green, and so forth. That's a classic sign of a ranging pattern, and oil has been ranging for a long time. Now bouncing off the 83 level here down to the 63 or 60 level. And every time it approached one of the extremes, we saw a big bounce off. That's a classical sign of a ranging market. Nonetheless, even in a ranging market, especially if the range is as wide as we see it here in the oil price, there are many opportunities, especially when prices go to one of the extremes, either to the downside or to the upside. And once again here, oil is approaching the downside, and this could be an interesting long opportunity to potentially enter into a long position in the anticipation that oil will be bouncing off this level towards the middle, in between support and resistance. All right, so that was our little market overview. And Niklas, do we have any questions so far, or can we jump into the best setups for the week ahead?
Yeah, we have a couple questions we can answer.
Okay.
So the first one is from Ben. Do you no longer use Power Bundle 360 indicators too much?
Oh no, on the contrary, we just released a brand new generation of our Power 360 indicators. But this dashboard right now doesn't include them. They only exist as standalone indicators for TradingView and other platforms. But potentially, we are looking to integrate those into the dashboard as well. But this will be a longer term project. But yeah, no, we very much use them. And please contact us if you're interested to know what this latest generation of the Power Bundle 360 indicators looks like.
Yeah, and we actually use them in the live trading session, most recent one, that we post the link for in the chat. And the next question from Ron is if you could please go back to GLD Daily.
Yeah. Okay.
He wrote the green sloping up bar from divergence cloud is just above the latest candles. So there is no divergence cloud here on the chart.
I think you mean MA Rush, probably. Yeah. I would imagine you mean this line here potentially.
Oh, that makes sense. And the question, sorry, but he had a question was, does that mean it's in an uptrend unless we cross below that one?
That's a really good question. Not necessarily. You can see we did cross below this level a couple of times before. And in fact, the way we determine trend, or what we use as main indication of where trend is going, either bullish or bearish, is based on our MA Rush indicator. So this one here, let me just hide the other one. So it's this indicator right now, which you can see it here, this one. And this indicator will tell you by means of a label on your chart, just scroll back a little bit, you can see it here, what the trend direction is. So in this case, trend has changed from bearish to bullish on March 13, 2023. And since then, we were bullish in gold. And the indicator is designed so that it sticks with its sentiment, so to say, for as long as possible. So it doesn't change its mind all the time. So even if we have a correction, like a deeper correction like here, the indicator will try to stick to its trend direction for as long as possible. And oftentimes this is the better approach. Now give this trend a bit more room. Corrections are completely normal in each trend. And unless there are many, many compelling signs that the trend really reversed, the indicator will stick to its reading, in this case, bullish.
Thank you. And this was actually, that's an answer for the question from Nima, who said, thank you for the presentation. What do the three lines on the chart indicate? So those three lines, like Daniel said, are momentum, MA Rush, and the horizontal lines are support and resistance. But before we move on from Ron, he said, oh no, just to clarify, he meant that on his own chart on TradingView, he has divergence cloud on gold. So maybe we could look at that at the end when we look at simple requests.
Yeah, either at the end or we're going to look at it in our lunch and learn session on Tuesday. Yeah, depending on if we have enough time. But yeah, that's a good idea.
Perfect. Okay. You are good to continue, Daniel. And is BTC USD an ETF?
No, that's the actual Bitcoin, I believe, spot price of Bitcoin. So as you can see here, it's actually open. The market is open right now. We can see this little green dot here. If we go to our, to the live chart, you can see that this is actually, will change price. It's the live market. It's the spot price of Bitcoin. It's not an ETF. Yeah, in this case, by a Bitstamp. That's the provider. I guess the price differs a little bit depending on who is offering Bitcoin, but in this case, the Bitstamp price for Bitcoin is this one. So it's a spot price.
Perfect. And just to wrap up Ron's question there, Ron, no, it doesn't mean that it just it'll be uptrend until it turns red. Okay.
Perfect. All right. Then let's go back to the slides because now we're going to do what you've been waiting for. We will do our 13-minute scanning process. Now, it will take me probably a little bit more than 30 minutes, but only because I'm going to explain things as I do it. When you do it on your own, you don't have to talk at the same time or answer questions. You will see this is a very fast process to find really interesting setups, really interesting, actionable setups. Now, what we're going to do, we're going to look at one setup at a time. We have 3 setups to go through. We're going to create a watch list or a hot list with these key setups. And then at the end, we're going to do a deeper analysis of these symbols in that watch list. Sounds good? Let's get into it. So what are these 3 setups we're going to look at today? We call these the power of 3 plus. Notice the little plus here. It's actually because there's a 4th one which comes in the picture, which is actually the easiest one to explain. We call this setup the healthy pullback setup. Now, what is that? Well, it basically goes down to the fact that every single trend, even if it's the strongest trend ever, there's no trend in the entire world, I guarantee you, which goes up in a straight line. Every single trend will eventually take a breather, a pause, and pull back a bit. This is what we call a pullback. And if this correction, this pullback stays within limits, we call this pullback a healthy pullback. And we have designed an indicator to identify these healthy pullbacks for us. And this indicator, you can see it down here, is called the trend radar indicator. This little heat map below the price chart, which shows you by means of these little patterns here, which can either go 4 levels down or 1 level down or 2 levels down. As long as it doesn't go 5 levels down, we consider it a healthy pullback. Basically, a break, a pause in trend, not a break, a pause in trend, which are in turn ideal situations to re-enter in the overarching direction of that trend. Why is this a good situation? Well, because now prices are much cheaper. They pulled back, in this case, from 130 all the way down here to 115. It's $15 less. That's like 15% or more. Yeah. So you're getting in cheaper and you have less risk on the table. Why is that? Because your stop loss level, which perhaps is at the lower end of this trend line, is now much closer by. So 2 really important factors which can make or break your trend trade are coming together when we have such a healthy pullback state. So that's one thing we're going to look at. And if this healthy pullback state, this is the real kicker now, coincides with a key support level as identified by our liquidity IQ indicator, then you have the trifecta. We have a strong uptrend, number 1. We are in a healthy pullback, number 2. And we are near a support level. 3 key factors coming together, indicating there's a really good chance that prices will bounce off this level at least towards the middle in between support and resistance. And we can just enter around this level, very high reward with low risk because our stop loss would just be below this support level. And the idea is that prices will bounce off and move towards the long direction. Now, how can we find these setups using our dashboard? Very easy. We're going to go to our dashboard here. I'm going to clear out our scanner. And first off, I'm going to point out that currently we are scanning through around 5,000 symbols. So almost all US stocks are in there. We have some foreign stocks. We have ETFs in there. We have futures. You have cryptos, FX, and so forth. All right. So 5,000 stocks. And the other thing I wanted to point out is that we are primarily using 3 indicators for our process. Let me go to gold here just to explain this to you a little bit. Gold chart. So what are these 3 indicators? Real quick. Indicator number 1 is our MA rush indicator. this one here. I'm going to hide this one as well. It's this indicator here, which shows to you what is the trend direction right now. Is it bullish or bearish? All right, that's this indicator here. That's indicator number one. Indicator number two is trend radar. This guy down here, which shows to you, hey, what's going on right now within this trend? Are we currently in a healthy pullback state? Little red patch here. How deep is this healthy pullback? Is it level 1, like here, or level 2, or level 3, or even level 4? Yeah? And you can also see, okay, we were in a healthy pullback. When are things looking to resume? So depending on how aggressive or how conservatively you want to enter, you can either enter when this healthy pullback is still in progress. Let's say we're going down to level 4, or you wait until it goes all green again, and then you enter in. Both are possible depending on your trading style. Okay, so that's indicator number 2. And indicator number 3, and I think I accidentally just removed it from my chart. 1 second. We put it back on. Is called Liquidity IQ. It's this indicator here, which shows us on the chart where are nearby support levels, these reddish lines, and where are nearby resistance levels. That's what we're going to use today to do our scan. So let me go back to the actual scanner and let's enter these criteria into our scanner here. And you'll see this is lightning fast. Criteria number 1, we need to be bullish. All right, let's do it. Let's go to MA Rush here and select bullish. And once I do this, you can see that of our almost 5,000 symbols, 2,000 of them are currently considered bullish. Perfect. You can see it also here in this column. Every single arrow is green and points to the upside. All right, very bullish. And also you can see this number behind this arrow, which indicates to you for how many trading days is this symbol bullish. So in this case, it says 148. Let me just scroll back a little bit. 1 second. We can see here, we have this bullish signal here. And if you count the bars from the most recent one all the way back to this label, you will get to exactly 148. So this shows you the trend duration. For this stock, for example, Aeon, for 632 trading days, we are bullish. So if I scroll back here, you can see, okay, wow, that takes a long time. To scroll back all the way to here, if you count the candles, it's going to be 632. All right, perfect. So we have found our bullish symbols. We can also see since how many days things have been bullish. So 2 key information. Now, second criteria is healthy pullback. How can we find stocks which are currently actually pulled back as per our trend radar indicator? Very easy. You see this little column here? It's called pullback. Click on it. You have different degrees of pullback you can scan for. My favorite one is level 4. The deepest pullback, a level 4 pullback. We're still very bullish, but we pulled back to level 4, 4 rows down in trend radar. All right, let's do it. I click on it, and only 118 stocks are now on our list. And let me give you an example. BBSI, Barrett Business. You can see it here. We are currently 4 rows down in trend radar. It's a very bullish stock, but we pulled back. Level 1, 2, 3, 4 rows down here. That's a healthy pullback. So you can see the rows here. Row 1, there's one below, another one. One here is also red. It's a bit hard to see. And the last one is still green. That's a level 4 pullback. All right. So now we're down to 118 stocks. And there was one more criteria. Remember which one that was? We also want to be near a key support level. Unlike this stock here, which is not near the support level. Actually, it's very close to this resistance level here. We want to find stocks which are actually very near its key support level, because then we have our trifecta set up. 3 things are coming together. How can we do this? Well, very easy. We're going to use this column here, the Liquidity IQ setup column. We use the filter and select long bounce. So long bounce means we're going to bounce off to the long side. And this happens when prices are near a support level. I select it, and you can see it here. Wow, only 2 stocks survived this very stringent scanning process. Maybe it was a bit too strict, but let's see which stocks these are. Trilogy Metals Inc. Okay. What do we see here? That's an interesting one. Look at this. It's a beauty. Uptrend. You can see it here. MA Rush is bullish. You can see it. It's a very cheap stock, but the principle still applies. So the uptrend is valid since this day here. We're bullish. Trending up, and our trend radar indicator, as you can see here, shows a level 4 pullback. We definitely pulled back, and we are near a support level. This kind of is the trifecta scan that we are looking for when it comes to our bounce setup. Now, let me quickly do something else. I'm going to add or create a watch list here because we said for every setup that we are finding, let's put the most interesting one into our hot list. So I'm going to create a new watch list in our dashboard. Click on create. There we go. Setups, colon 2025-05, May 24 today. All right. Great. I'm going to add this particular symbol to our list. All right. Done. Edit. Okay, that was one. What about this one here? Willamette Valley. Also very cheap stock. Yeah, that's a stock which recently turned bullish, but I'm not really convinced of this one. I'm probably going to skip this one. It seems to me that prior to this, we were in a very steep downtrend. You can see it here. And even since we are bullish, prices are really, I don't know, not very clean here. And there's not enough room or not a lot of room between support down here and resistance up here. So we're going to skip this one. All right, so that's good. But you know what? Sometimes having or requiring all three criteria to come together is a little bit too strict. Especially today, we only had two symbols to choose from, but there are more interesting ones. So let's loosen these criteria a little bit. Let's, I guess, remove our level 4 pullback criteria. Because sometimes, even if the pullback is not level 4, maybe to level 3, it could still be a very interesting one. So now we have only, in quotes, we need to be near a support level, long bounce, and we need to be bullish. And I'm going to do one more thing. I'm going to now sort by trend duration. So you see this number next to this arrow here? That's the trend duration. I can sort either from lowest to highest, where the trend is the shortest. It was just recently established, or what I'm going to do now, from highest to lowest. All right. So let's see what comes up here. Eli Lilly. Yes, the stock we've been discussing a lot if you're joining us repeatedly in these Lunch and Learn sessions, because it is a very interesting stock. Why? Because it is a super bullish stock, which is currently consolidating. We had this huge move upwards. You can see it here. Prices have been moving up and up and up and up. And then after the all-time highs in the summer of 2024, we are now correcting and ranging basically between a lower end around this level here, around 700, and an upper end around 920, 930. And once again, this stock now has arrived, you can see it here, at a key support level. And I find this could be a very interesting opportunity to potentially enter into the long direction. I like it because it's clearly range bound after this strong move upwards. And that's very normal. After strong bullish moves, the consolidation phase oftentimes goes sideways and can take quite some time. So that's good. We are clearly sideways here. We are near support level, and the overarching trend is still bullish. In fact, bullish for 1,366 trading days. So I still believe that this stock is a very interesting opportunity to enter right now at these levels, because prices are at a discount right now, in the anticipation that we will bounce off this level towards the middle, at least in between support and resistance. So I'm going to add this one as well to our list. All right, done. Next one on the list, Linde PLC, also a stock which we have been watching for quite some time. It is an interesting one, also consolidating, quite similar to Eli Lilly after a strong move up, now consolidating, and we are near this support level. The only thing I don't really like about this one is that it has these crazy bars every once in a while. Do you see these bars here? Which would basically trigger every single stop loss you have in play. So to me, getting into something like Linde would only be an option if I actually use an options strategy here, which would limit my risk. And if such a crazy bar occurs, then of course, all I'm risking is the options premium in this case. But nonetheless, an interesting setup since we are currently at this key support level. I'm going to stay on the sidelines for this because of this crazy price action. AGM, Federal Agricultural Mortgage Group. All right. Also an interesting one. And you can see here, we also discussed this one a little while back, a stock which is in a strong uptrend, right now consolidating after the all-time highs, have been established in a sideways range. And once again, we are approaching a key support level. And this could also be an interesting long opportunity. So I'm going to add this one to our list. And we have one more, Targa Resources. Actually, a few more, which I would like to look at. Targa Resources, an interesting stock as well. Long-term uptrend. You can see it here. Prices have been going up. We've been an all-time high and consolidating ever since. And also here, we are now right at a key support level. And also, this stock could be an interesting long opportunity in the anticipation that this long-term uptrend is about to continue. So also this one, definitely an interesting one. All right, and we'll do one more real quick. Aflac Inc., AFL. And then we're going to summarize what we've seen so far. So what do we see here? Bullish for 1,099 trading days. We are near a key support level. And also similar setup here. I think many stocks are actually consolidating right now. You can see it here. Huge move upwards. Definitely in a consolidation phase. Actually, it looks like a nice flag pattern here. At the lower end of the flag. And I think this could be an interesting opportunity to enter long now. And once again, the expectation is that eventually this overarching long trend is going to resume. And perhaps we're going to see the bounce right off this level. And if the trend resumes, we are now getting into this stock at the very advantageous price level. So this one I'm going to add to our list. And by the way, guys, let me just show you an example of how it is supposed to work out. Remember, well, for those of you who are getting our newsletter, do you remember our trade of the week, which we sent out in our newsletter every single week on Monday? We once pointed out, and I think Homer, you also like the setup very much. It was called Brinker International. Brinker International one. You know, it's a company behind major food or restaurant chains. And what we did here, of course, this is the current price action. As you can see here, we are around the 154 level. But what we did is in our trade of the week, we pointed out, you can see here the screenshot of what we sent out was the following. The prices actually came down all the way to 133, which was this level down here. Yeah. And we said, hey, this could be a great opportunity in the anticipation that prices will bounce off this red level here towards the middle. And this is exactly what happened. And this is the idea behind the setup. We are bouncing off this level towards the middle in between support and resistance. And what's also really interesting here, and I bet you by the end of next week, but maybe I shouldn't bet. Do you see this gap here, which I highlighted with this big down gap, which is not yet filled? But it looks to me, I mean, prices basically scream it at me that this gap is going to be filled very soon, which would also coincide with this key resistance level. So I'm fairly confident that we're going to see at least the price move to 159 in the next week or 2 weeks to fill this gap. Looks like prices are poised to fill it. But who knows what's going to happen. All right. Any questions so far, Nicholas, of this setup, or could we move on to the next one?
Not on this exact setup. No, we just had a question about Eli Lilly, the setup there. If we can take a look at that.
Yeah, let's do it.
So there was a question, is Eli Lilly, LLY, a level 5 pullback? And is there such a thing? And are you still interested even though there's a level 5 pullback, which is basically a reversal?
It's a different, so we're in a different market state here. So this is actually a really good question. Thank you for asking this. This is basically a pause in the overarching trend. We went sideways. So we are no longer in this phase where we're just, grinding higher. That's clearly not the case here. We are consolidating after this huge move up. That's completely normal too. Now, when we are on the grinding phase, where we're grinding higher, then I'm looking for these pullbacks. Yeah, that's not the case anymore. But also, of course, you want to enter also during this phase here. So you enter when you have this pullback. Here, we are clearly now in a sideways phase. If I drew these lines here manually, and here you can see prices are ranging basically between these levels. And what I like about this one is also that these levels are quite far away. So even in the sideways market, I want to, place trades. But these are no longer pullbacks because these are basically, I'd say, micro trend changes where we are alternating, been going down and up within that sideways range. You can see it here also in trend radar. All red goes to all green, goes to all red, goes to all green, goes to all red, goes to all green. That's a clear pattern for an oscillating market within a sideways channel. So no, it would not be the pullback I'm looking for. I wouldn't even call this a level 5 pullback. That's just approaching the lower range in this case. That's how I would look at it, because we're clearly sideways now. Another example of this, just for the sake of giving extra explanation, is oil. Clearly in a long-term sideways pattern. And you can see it here in Trend Radar. All red to all green to all red, all green. It's like alternating. First, it's just jumping back and forth. But there's also a lot of opportunity here because every time we are approaching either extreme, ideally supported by a key support level or a resistance level, if it's to the upside, then we could just enter there. And if there's enough room to the upside, if these levels are far enough away, there's definitely an opportunity there as well. Yeah.
Thanks. And we have a question here from Richard. He says on Eli Lilly, there's 10 to 15% upside. He would prefer to find ones that are more depressed and have a larger percent upside. Is there a way to scan for something like that, like a percentage upside for a setup?
That's a good opportunity, a good question. Currently, we don't have a scan which measures the distance between support and resistance, but that's a good idea. That's exactly the kind of suggestions I would like to see from everyone. Yeah, thanks for this. We're gonna take a note of this. So Niklas, please take a note, and we will see if we can add something like this.
Sure. And is there a long reward to risk column?
There
I thought
is.
there was.
Oh yeah, that's true. You're right, Niklas. Maybe you already thought about this. Actually, you are right. Yes, we do have this column here. You're absolutely right. Long reward to risk. And you're right, for this particular setup, what we could do is the following. Okay, so let me just go to Eli Lilly here. Where is the stock? Let's see what we can see in this particular one. Yeah, it is to some degree, actually this upside is quite substantial because our reward to risk ratio, if we were to take this bounce trade, so let me just expand a little bit more. So first off, if we were to take this bounce trade, where would we put our stop loss and where would be our target? Well, our stop loss would typically be just below this key support level because our idea is this support level will hold. If it doesn't hold, we probably want to get out of this trade. So we're just going to place it somewhere below, nearby, below this level. Where would be our target for this long bounce? Well, it would be probably just below this key resistance level. Correct? Because this is resistance. Prices may bounce off from this level to the downside. We don't want to give away our profits. All right, that makes sense too. So giving this trade idea, what this scanner is actually showing us is if we were to place our stop right below and our target right below this resistance level, our reward to risk ratio would be 5.15. What you can do then, last thing, what you can do, you can search for these long bounce setups, filter for them, and sort by the ones with the highest reward to risk ratio. Of course, this one is going to be an outlier because it's probably a stock which is not tradable. It's a penny stock at 0.18. Yeah, well, these are crazy far away. You probably would not do this. But in theory, here the reward to risk ratio would be 71.28. But let me just make this a bit more realistic. Let's also filter for bullish stocks. And now we could, for example, find this one here. M&F Bencorp Inc. Ugh, not liquid enough. Let's skip this one. Aterian Inc. 7.49. Right at the key support level, we are bullish for 202 trading days. You can see it here. And our resistance level will be all the way up there. Potentially, yeah, that's a good idea. So yeah, you can utilize this column here, the long reward to risk column, to find these stocks which are currently near support level, where resistance is miles away, and which are currently bullish. Yeah, great point.
Perfect.
All right.
And one last question before we continue, then there's a lot we get to later, is can you scan by industry?
Yeah, you can do too. Yeah, we actually do have. Also, this was a suggestion by a user. We have these columns here. So what you see here are the columns that I typically use on during these webinars, but you can enable additional columns such as sector and industry. And you could see, for example, if you're interested in, I don't know, energy, you pick the energy stocks here, then you can only see the stocks which are currently in the energy sector. So this would be the sector, and industry group is similar. You would, so maybe you're in into oil, whatever, you can type it in, and then you can filter by this as well. Or if you're, let's say, in healthcare, just one example here, healthcare here, and perhaps you're interested in biotechnology. So you type in your industry group here, and you only see the biotechnology stocks. That's very easy to do that as well.
Thank you, Daniel.
All right, perfect. All right, let's move on. Next setup. So that was the first setup. We found some interesting stocks there, but there are two more I would like to cover. The next one is the zone break setup. And what I like to point out oftentimes at this time during my webinar is that, hey, nothing lasts forever in life, unfortunately. And eventually, every support level will be broken to the downside and every resistance level will be broken to the upside. It's just the name of the game. But if this happens, there are also opportunities for us as traders, because then we could, in quotes, bet on the fact that this breakout move will continue in the direction of the breakout for quite some time. You can see it here. We broke below support, this red line here, and then price just continued moving further down. That's exactly the idea of the zone break trade. But there's one caveat. Oftentimes, you can see it here a little bit. Price went down, but came up again. It's retraced one more time before it moved down. This is what we call the initial retrace after a break. We actually have a name for this. It's called the zone break retrace setup. It happens to the downside, but also to the upside when resistance is broken. So here resistance was broken, prices go up initially, then the market tries to fake you out. They come down all the way, and where do they go down to? Back to this broken resistance level. And then typically they stop there, and then the move continues. And why do they stop there? Because once resistance is broken, it will switch roles. Resistance will become support, and this is exactly what we're seeing here. Support held, and prices then continue grinding further up. In fact, this is one of our most favorite setups because it's really powerful, because you wait it up. You skip basically this initial fake out, and then you enter in this direction. And in fact, I believe our trade of the week, maybe last week, I forget when it was StoneX, a classic zone break retrace setup. Look at this one here. Textbook. We'll see what's going to happen, but this is textbook zone break retrace. Let me just one quick second. Yeah, there we go. Actually, I'm going to hide some of the labels here. Give me 1 second. There we go. So it's a bit clearer. All right. So what happened here? Prices broke. You can see this little zone break arrow here above resistance. We broke above it on April 25th. Prices initially have gone up. So zone break, we go up, but then the fake out happened. And where did it go to? Directly back to this broken resistance level, which is now acting as support. That's classic zone break retrace, a prime opportunity to now enter long into this uptrend, an uptrend which for this particular stock has been going on forever, for many, many years. Here at the scanner, we can see for 1,251 trading days. Let me just hide these two columns here. So for a very long time. In fact, I'm going to hide this one too. Perfect. Yeah. Super long-term bullish setup. I'm going to add this one to our watch list as well. Okay. So, but how can we scan for these systematically? So this one I just picked up, but how can we scan for this systematically? Very simple. We simply select from our Liquidity IQ setup column here the setup called long break retrace. I click on it, and you can see here of our almost 5,000 symbols, only 18 are currently in such a state. Wow, that's very selective, but these are very powerful setups. Let me show you an example. Carpenter Technology Corporation, our first one here, CRS, long-term bullish for 811 trading days. Yeah, currently, or recently, it broke above resistance on May 13. Initially, it went up and prices came down towards this level again. And I think here, if you wait a little bit, if you are patient for prices to come down perhaps all the way to this level, we're now a little bit further away, this could be a great opportunity to re-enter into this long trade. I'm going to add this one as well to our list. Next one on the list, BMI, Batcher Meter, bullish for 611 trading days. You can see it here. This is not as clean as the StoneX, but we had our zone break here. Price initially went up, gapped up even a little bit, and then we came down back to this level, and now prices are up again. So also this one, if we come down once again to this level, this could be a very interesting long entry opportunity for this stock because we have our classic zone break retrace setup. All right, so I'm going to add this one as well. And last one, Perdico Education Corp. Let's see what this one is all about. Yeah. Once again, very similar. We broke above resistance. You can see it here. Prices went up. Resistance becomes support, and now we retrace back to it. But also here, I would wait a little bit. I'm a very patient person when it comes to trading. There's so many different setups. Every day you're going to get new ones, and some of them will come to your expected area. So I always like for price to come exactly to where I want it to be. Just like what we've seen for StoneX. One more time. This is the perfect picture, perfect setup. Now is the time to enter here directly at this level. Beautiful zone break, retrace down to this level. Now it's the time to action on this one. So this might as well be once again our trade of the week for our newsletter on Monday. We'll see. All right. Any questions for this one, Nicholas?
No, but we had a question. Hey, how come we're not looking, or do we look at earnings and dividends on TradingView after we find the setups here?
Yeah, that's the next step. So we do this always in a stepwise fashion. And I told you it takes 30 minutes, but I'm talking a lot, so it's a bit slower. But what you would do now, this is a great segue, Niklas, we will go to our watch list, to our hot list. So with the most interesting symbols, the one which we have narrowed down our interest to, these ones. And now we're going to do our due diligence, exactly as you said. What we can do, let me just make this a little bit bigger so we have a bit more space here. What we'll do is now we're going to add on all this other information which is relevant, such as, oops, 1 second. I just froze for a second. There we go. Such as earnings. When are earnings coming out? I'm going to enable the earnings date column here. So you can see exactly when earnings will be published, because I don't really want to trade right into earnings because then things are unpredictable. That's an important factor. And I'm going to look at dividends, for example. When is the next DivX date? What's the dividend yield? And so forth and so forth. So I see it all here. And then, we can make our decision. So for example, here, if we were interested in StoneX, you can see, for example, well, there's no dividends being paid by the stock, but that's maybe not so good. But also the earnings, they're still far out. Only on August 4th, the earnings will be published. So there's lots of time for this to happen. And this is just one more factor that points that this stock could be a really interesting idea, because it's a long-term uptrend, very smooth uptrend, level 3 pullback. It's definitely a healthy pullback. In this grinding upwards phase, we broke above resistance, prices pulled back, resistance is acting as support, and this to me is a picture perfect example of a zone break retrace setup. So once again, I'm going to add this one to our hot list because everything here checks out. I'm going to add a new trade note and add the stock with today's timestamp to our trade notes section. Perfect. Close. Okay, next one.
Daniel, you're muted. You just muted yourself a second ago by accident.
Oh boy, sorry, I pushed the wrong button. Where was I muted, Nicholas?
You said next one, and then you muted.
Okay, perfect. So next one is Carpenter Technology Corporation, also a zone break retrace stock. And here we can see, all right, earnings are coming up on June 23rd. All right, and dividends just happened at the DivX date, small dividend yield. And here I would wait. So here I definitely would wait for the pullback towards this level. Here I would not enter at this point. Here I think there might be another push further down and then potentially enter into this long trade. So here I'd wait a little bit further for prices to come down. But nonetheless, I put my little note here. This would be my target areas. I'm going to add this one as well to our hot list for today. Adding the screenshot to our trade notes. All right. That was that one. Next on the list is Batcher Meter. All right. And actually, before I do this, by the way, guys, little side note, we'll probably look at this one here. You can actually also filter for stocks where earnings are coming up potentially next week or in 2 weeks. If you're an options trader looking for extra volatility, perhaps with strangled trades or straddle trades, that would be a way to do it. Because earnings typically increase volatility. Yeah, and as volatility picks up, option prices will increase. So if you want to go long options, that could be a way to do it, to filter your candidates there. Or if you're a dividend investor, you can filter for stocks with the highest dividend yield being paid out. And it's also possible with the dashboard. Okay, so Batcher Meter, let's have a look what this one is all about. Yeah, this one to me is not so clean. You know why? Because this was a deep V-shaped correction. I think that this gap here, see this one from here to here, this gap might get tested. This big up gap here, it's not been filled yet. So here, I think I would probably stay away from this trade just because we have this gap here. Also, this break above resistance was not really, there was no follow through really, just a shallow break and then immediately the retrace. So I think this might be a sign that, hey, this breakout was a fake breakout and we will see a deeper correction. So I'm going to stay on the sidelines for this one. All right. What else do we have? SNEX. Yeah, SNEX for sure. As mentioned before, is going to be on my hot list. Beautiful setup here. And now to the bounce setups. Which ones did we have here? Eli Lilly. Yes, let's have a look. Yeah, definitely an interesting one. I think, with pharma, the only thing with pharma is that it's sometimes a little bit unpredictable because, any news announcement, this is an industry which is prone to this, can shake the stock market so much. Either fundamentally, if the policy changes, if, for example, something comes out which would limit the profit potential of the pharma industry, perhaps with price regulation, that would shake the market completely. That's definitely a risk. And also, if a new medication is approved or disapproved, prices can just really move a lot in this industry. So I think the safe way to do it here is probably through options, because then you always risk limited should as such a major nuclear news event happen. So that's just one piece of advice. Otherwise, I like this setup a lot. It's really range bound. We are at the lower range. The overall trend is bullish, so we have this bullish bias. Now could be a nice opportunity to enter into a long trade here with Eli. I'm going to add this one as well to our hot list. And by the way, a stock which we have traded many times, exactly this setup for. So I'm going to add this one as well. All right, close. Targa Resources, next one on the list. Yeah, same setup. Very nice, beautiful correction to the downside. I think this could be the end of this correction, and I do like it. Maybe wait a little bit until we come exactly to this level and then enter to the long side. Long-term trending stock to the upside for 1,005 trading days. I'm going to add this one as well. All right. This one looks good. AGM, Federal Agricultural Mortgage Group. You know what? Here I'm going to stay on the sidelines because this support level where we are right now has been broken before. I can see here prices went below this level even further. I'm not too confident that it will hold this time because it is already weakened by this break here. So I'm going to skip this trade. If you want to play it safe, you would have to put your stop loss all the way down here, which I don't want to do, below the swing low. So I'm going to skip this trade for now. All right. AFLAC. Oops. One second. AFL, ticker symbol. Yeah, similar thing here. This level was broken in the past. I think I'm going to wait as well, even though it's a long-term bullish stock and we are clearly similar to Eli and all the other ones in the consolidation phase and now at the lower end. But I think here I have a feeling that prices will come down a bit further. Maybe if you go down to this level, then it could be the great opportunity to enter long here. So here I'm going to wait a little bit longer. And then one more, Trilogy Metals. Oh, that's the one which also yeah, had the level 4 pullback at the same time. I'm going to skip this one. It's just too cheap for me. I'm not a penny stock trader. Not my style. So yeah, it's too risky for me. This stock is probably not optionable. So I will stay on the sidelines with that one. And I think that's it pretty much. Yeah, that's it. All right, guys, I think we do have a very nice hot list for next week when the market opens on Tuesday. So let's see which ones of those will actually enter on Tuesday. Of course, just very important, it is always required, regardless, to see where the market opens after the weekend. God knows what can happen over the weekend. You want to make sure that this setup is still valid and as advantageous as we are seeing it right now, meaning prices should still be in the neighborhood. They may gap a little bit, but they should still be in the neighborhood. If, let's say, Eli Lilly bounces below this level, maybe to here, because something crazy happens, well, we're going to not take this trade because then this level has been broken. Our setup is invalid. Or Eli Lilly gaps open to here. I will also stay on the sidelines. Why? Because now my great entry price at 713, or this area at least, is no longer there. It's too expensive now. So this is always important, something important to double check when the market opens on Tuesday in this case. All right, Niklas, that was my scanning process. Do we have questions?
Yeah, so first of all, we had two comments. One from Ron saying thanks for the swing trading session. He can't make the intraday ones. And then one from Al saying he trades options 1 to 3 weeks before earnings to take advantage of volatility. Yeah. The scanner's amazing. Thank you, Daniel. Awesome. And okay, so now the first question we have is from Steven. So some of your symbol examples show level 5 pullbacks, so those reversals on trend radar, but MA Rush doesn't change from bullish to bearish. And then he had another question afterwards. How do the 3 MA Rush levels relate or correspond to trend radar?
That's a really good question. Yeah, so as a rule of thumb, MA Rush has a much longer term look back. It looks for the macro trend, which is, I think it's very important to understand what is the macro trend. That's what MA Rush is for. So in this case, it's clearly, well, let me scroll back a little bit for Eli Lilly here. Let me see when it actually changed the macro bullish trend here on December 16, 2019. So this stock is bullish forever. That's the macro trend. Trend radar has a shorter look back. It's not the macro trend, it's what's going on right now. What's the current market condition? And this is actually why when we explain trend radar, it's an indicator to understand the current market condition. In this case, you can clearly see, almost without looking at the chart, that we are ranging. All red goes to all green, all red, and so forth. That's the ranging pattern. You can see it very clearly in the trend radar indicator. So, this is just another piece of information which explains to you what's going on right now. Macro bullish stock currently in the sideways ranging phase. And then you look at the levels where price is in relation to this. This is where liquidity IQ comes in. And you can see here, while we're at the lower level, we are in a ranging pattern and it's macro bullish. That could be a great opportunity to enter long at exactly this price level.
Thank you, Daniel. Okay. And then, from Gerald, when are all the new stocks coming in? So I think it's in the works.
It's in the works. Yeah, we are actually adding stocks every week, but not as big bulks. We're just doing this slowly. But yes, it's coming.
Thank you. Okay. And then the next one is some symbol requests. But let's just get this first question out the way. Ron says he's confused by what liquidity capture is on the dashboard.
Yeah.
What is magnet zone 1 through? I see numbers as high as 30 plus and some that have no number for mag zone. So what does the number mean?
Yeah, good question. Oops, let me just go out here. There we go. Yeah, so let me quickly go to the entire scanner. Let's have a look at these numbers here. So these numbers are next to the setup. And this could be any setup, could be long bounce, or I'm just good sort my symbols here. Could be magnet zone, could be short bounce, and so forth. These numbers indicate for how many trading days this setup has been in place. So this one, for example, here, Alcoa has been trading for the last 10 trading days near a key support level. If you count these numbers here, it's exactly 10 bars. We are above this key support level. Magnet zone 15 means we are in between support and resistance, like somewhat in the middle for 15 days. This is always the duration indication here. So here you can see prices are more or less in between support and resistance, somewhat in the middle, and it's been going on for 15 trading days. That's the idea of this number right next to it.
Thank you, Daniel. Okay, so now we have symbol requests, and the first one is Philip.
And just real quick, yeah, that's perfect. Before we get to the symbol request, one last reminder, because I think that sometimes the symbol request just takes a little bit of time to cover. I think my computer froze again. 1 second. There we go. Guys, if you're interested, just real quick to try it out, our Liquidity View dashboard. Now that you've gotten a nice demo of it, simply go to tradingindicators.com/view to get a full week of a free trial. Just wanted to point it out there one more time. All right, now let's do the symbol requests.
The first one is Philip Morris. And while you're going MPM, and while you're going there, Dave Feldstein asks, what about volume in ATR? So I think that's an interesting question. They're taken into account, kind of.
Yeah, let me just quickly go here. Yeah, Philip Morris, a beautiful zone break retrace setup. Wow, look at this. Long-term, bullish for 248 trading days. We broke above resistance at this level here. Prices went up. Big retracement. I think we did point it out. Let me quickly see what we did here. We definitely pointed out this stock. Yeah, that's why I drew it. Wait for the pullback. It happened. You see it here. We get to this level here. Even with a gap, this is beautiful. This was too bad we didn't. Maybe we discussed it. You can see it here. We did break down with a gap, with a down gap here, directly to this entry zone near this resistance level. And this would have been a great opportunity to enter long here. Why? Because here we actually have 4 factors in our favor. Uptrend, number 1. Zone break retrace setup, number 2. Number 3, a gap which just screams to get filled to the upside, and price would need to go up to fill it. And well, I guess that's it. But still, beautiful and a healthy pullback at this point by Trend Radar. So yeah, would have been a really great setup to trade. But now we are extended a bit. So I'll be a bit careful, because if we see a pullback one more time, the stock, maybe level 2 or level 3, then I would consider entering long. But right now, I would wait for the pullback. I would not enter when everything is green here. That to me is too risky. We're too far away from our averages. I would wait for things to come down a bit.
Thanks, Daniel. And yeah, the question from Dave was, how are you taking into account volume in ATR?
Yeah, indirectly, it's already taken into account by the indicators on the chart. So we don't typically just look at raw volume or raw in quotes. We always look at these in context. For example, a liquidity capture event. Oh, I guess that's what we wanted to discuss. Let me just find one here. Do you see? One second. Let me just enable the label. There we go. Okay, perfect. Look at this one here at Philip Morris. Do you see this label down here called liquidity capture? And then if you look very carefully, it's a bit hard to see. In fact, let me just switch this one off. You see this little shaded area here? These are liquidity capture events. Basically, what these mean is that we have a bar which is near support, and the volume of that bar is extraordinarily high. So this is where volume comes in, but it's contextualized to where price is right now and near which level. And an indication of this would be, or the interpretation of this would be that, something is going on right now. We are nearing support and trading volume is spiking up. What could this mean? Oftentimes it means that the chances for a reversal of this key support level are actually increased because somebody's stepping in at this level, increasing trade volume, probably the big players, the institutions, the culprits, so to say, and driving price further up. So this could be a telltale sign of a reversal. And this is one example of how volume is taken into account in this approach, but it's always contextualized. And similar it is to the ATR, which is used, for example, to identify our trend, where trend is going. It plays a factor there, and other calculations, but it's always indirectly. It's within context.
And the follow-up question from Dave was, can you display things like ATR and volume in the scanner? So you can do volume, but ATR, I think we kind of have volatility, like you said, which is
Yeah, we don't have ATR. If you send us a mail, maybe we're gonna add it if many people are interested in this. But right now we have just volume here. You can see how high the volume is and how much it's above or below its average volume by this column here. But right now we don't have ATR.
Thank you, Daniel. And then the next symbol request is a German stock, if we have it, called QH9.de.
QH9. Yeah, of course we have it. Okay. Bullish for 86 trading days, near a key support level for 6 trading days. You can see this here by these two values. Yeah, we're definitely near a support level here. Let me see, where did we switch over? Yeah, bullish here. We're still bullish, even we pulled back quite a bit to this key support level. And let me just look at this one. Yeah, but I'm not too sure I would trade this stock. It's oh boy, where are we coming from here in this stock? Yeah, it really went down from 25 down to this level here. We switched to bullish, but I think overall this trend is still looks pretty bearish to me. So I would not be too confident to go long this stock. Yeah, I personally would stay on the sidelines on this one.
Thank you, Daniel. And the next symbol is from Moshe, HIMS.
Yeah.
And a question while you're going from Robert is, do you recommend sticking to a small list of favorite stocks like top sector leaders, or do you start to try to make a new list every week?
I make the new list every week because you never know. Sometimes a stock which is perhaps not on my radar yet has a very beautiful, I would call textbook setup. I don't want to miss out on this. So I don't discriminate at all. Only stick to my favorites. That's one way to do it, but I typically just scan everything and then I do a bit of research as to what this particular symbol is all about if I don't know it. Okay, so HIMS is in a magnet zone. We can see it here in between support and resistance. It's bullish since beginning of 2024, and now we're right in the middle here. Yeah, a bit of a down gap here, which is looking to get filled, which is interesting. So yeah, I mean, overall, I'd say it's rather bullish than bearish, but it's not really an area where I would like to enter for two reasons. First off, the support level is all the way down here, so my stop losses would be really far away, and my target would probably just be below here, below this resistance level. It's not the best reward to risk ratio. So personally, I would stay away, but it looks bullish to me. So I think this gap here, this is a small gap, it's probably going to get filled soon. And if it does, we may approach this resistance level around 68.
Perfect. Thank you. Okay. And then the next symbol is Apple.
Yeah. Apple. Okay. Bullish for 542 trading days. All right. Let's have a look. Oh, we gapped down a little bit on Friday. Let's have a look here where we are. Yeah, it seems to be rangy too, huh? This key support level has been holding up. Actually, we knew about this level since the beginning of 2024, where it went down, bounced off, came all the way down to this level again. And look at this one here. Liquidity capture. Exactly at this level. This shaded area. Or here. Versus bounced off from this level again. Now we're kind of in between levels. Similar. I would either wait until we come a bit closer here, then enter long. I think Apple is the stock which you probably want to have in your portfolio. But I feel like prices may come down a bit further, especially all the turmoil. If it happens, then enter long and then hold the stock. And the overall expectation, of course, is that Apple eventually, longer term trading, probably above a swing trading horizon, will reach all-time highs. But I would wait a bit longer for prices to come down a bit further.
Thank you. Okay, and the next symbol is QBTS, qubits.
Yeah, this one I think we have only on Trading View.
And while you're going, a question from Dave: do you ever think about the float of a stock? So like the tradable shares?
Usually not. No, that's. Now I do look at some fundamentals and some of these statistics, but typically this is not one of them I look at. Yeah. Okay, a quantum stock. Yeah. Anybody on our options service probably would be very happy to to have traded this quantum stock back in the day when it was down here at these levels. Now, of course, things exploded to the upside. We discussed it in our options webinar or on our options special on quantum computing. Yeah, what a great evolution. Now, I mean, if you have it, congratulations, enjoy the ride. But right now, I would definitely wait at the minimum for prices to come down to test this broken resistance level and to fill this gap. So I would not enter at this point. You never know. It might go further up, but to me, it's too extended, and the correction is not unlikely.
Perfect. Okay. A question from Moshe. Oops, sorry about my microphone. Question from Moshe. Is there any advantage to using MA Rush on a 4-hour chart if it's meant for macro?
It's always the bigger picture. And the bigger picture is relative. So now we're doing swing trading, and our bigger picture is, a couple of years back, for example, to see what the macro trend is. If your perspective is perhaps to find a trade for the next week, you look at the 4 hours, see what is the macro trend from that perspective for this trade horizon. So yeah, for sure. And we use it in day trading all the time too, on a much, much smaller perspective. Let me give you a quick example. Oops. Here, let me just open up a new layout. Let's say, I guess this one here. Okay. Okay, so here, this is a 5-minute time. This is our day trading chart. We also have a volume indicator on here, but we use MA Rush also the same way on these smaller time frames, just to give us the current momentum direction, because we want to trade with the momentum, not against it. So yeah, it's always relative. Yeah, that's what I wanted to say.
Thank you. And then a question from Vasilios. Is there a demo for NinjaTrader 8? These indicators are available on NinjaTrader 8.
Yeah, send us a note. Actually, in fact, maybe this is a good time here, Niklas. Maybe you can put it also into the chat. Send us a note via our homepage, tradingindicators.com. Main menu, go to contact, put your question there. It will come straight to my inbox or Niklas's inbox, and we'll get back to all of your questions, especially these kind of questions. Hey, how can we use your indicators on different platforms? We'll show you some options how this is possible.
Thank you. And I wrote down, Stephen, your symbol request for the dashboard. Do we have time for another symbol request?
Yeah, let's do it.
Okay, we have two last ones. CRWV.
Yeah. CRWD?
V, like
you don't have it here. Okay, let's go back to my, just a second. Full view. Open anyways. Okay, CRWV. All right, core wave. Okay, let's have a look. Go to the daily time frame. 1 second. To reconfigure my indicator real quick to look at the swing trading horizon. Wow, what a move up that was. Is this a brand new stock? Yeah, okay. Yeah, I don't really have an opinion about this because a stock like this only has very limited historical data, and the IPO just happened 2 months out, so it's almost impossible to to trade the stock from a swing trading point of view because you have no levels yet. There's nothing to say about this. If you go down a couple of levels, we probably could see some insights. Huge uptrend, of course, as per our MA Rush indicator. Bullish since April 24th, huge moves up, and there's a couple of pullbacks here, which our trend radar indicator could have indicated. Now, once again, a pullback. You can see it here. Prices came down all the way to this zone of control of our volume IQ indicator. We do have bullish order imbalance, so that's a good sign. And yeah, after this pullback, this could be a good idea to enter potentially long, in the anticipation that this stock will continue its upwards move. But this is from a smaller time frame, on the 50-minute time frame. From a day trading point of view, sorry, from a daily's time frame point of view, there's just not enough information on this one. But yeah, but definitely it looks like a very bullish, explosive stock.
On the shorter time frame there, Daniel, it looked like it's gearing up to start selling off finally with all that volume it's seeing.
Yeah.
Oh, and the last one, CVS.
Yeah, CVS. All right. CVS Health. Long bounce near a support level, but bearish for a long time. Yeah. Here, let me just zoom out a little bit. You can see this stock definitely is bearish. Prices are coming down. We are near a support level, so we may see a bit of a bounce off this level here, but yeah, so I would wait for sure. If you want to play this one to the short side, whether this level will be broken. If it does, I think the next stop will be probably this level here at 51, down from 59, or this level down here at 43. But I would wait to see if this level holds or not. If it breaks, yeah, we could probably play this to the short side. Also anticipating, once again, don't call me crazy, that this gap here, this up gap will be filled. Price would need to come down all the way to this level at 55.
Perfect. Thank you, Daniel. And we had some other ones come in. If you have time, one of them was
2 more. Yeah,
sure. One of them is from Garrett. Maybe we can go to Trading View because we already looked at gold on the swing trade. He asked MGC, so maybe we could look at it on intraday. We already kind of did the equivalent with gold.
Yeah, it's going to be the same as GLD. Here on the 5-minute time frame, yeah, we did have and gold is making a comeback. And of course, this is all in relative terms. It's been so bullish, but we had this retracement, which we're all praying for, as you can see here. So gold has been pulling back so nicely. That was a perfect opportunity. And we called it out last week to scale into gold. Now prices are way up. But let's see where we could go from now on the smaller time frames. One thing I see is that we did break above this resistance level. Now maybe the retrace towards this level might be in progress, and if it does, potentially enter long here on a much smaller time frame in the anticipation that this bullish move up will continue. Just be aware that we do have this key resistance level here, right? Well, a couple of ATRs on the daily time frame away.
Thank you, Daniel. And the last one is Tesla.
Yes, Tesla recovered also nicely, yeah, off its support level. Oh, it's flagging also a bit. So yeah, we bounced off the support level here, where we're screaming, oh my God, what's happening with Tesla? I just lost 50% of the all-time highs. This level held nicely. We called it out a few times that we're testing this lower end. Now we're way up. And this looks to me like a classic flagging pattern. Huh? Flag post here and then a little rangy side here. Let me just draw this in one more time. Don't make fun of my drawing skills. They are not very advanced. But if we were to draw this, you can see here the flag post. It's a bit bigger. White. Oh no. I shouldn't have. Oh, there we go. Okay. And then here we have the flag somehow here in Tesla. If we get above this level, I think another leg higher might be in play. Of course, Tesla is a stock which is always quite volatile because it's in the news so much, but it's calmed down. I guess it's with Elon Musk having less exposure to the politics. Things have recovered, and of course, a company which is not really just a car company. It's an AI company, it's a technology company, an energy company, all at the same time. So, yeah, I think Tesla is a stock which also should be in your portfolio if you're willing to, endure some of these crazier swings. Yep.
Thanks, Daniel. Perfect. And we had a question from Vasilios. Is it free for 7 days for the dashboard, and then the subscription is monthly?
Monthly or yearly. Yeah, you can pick either options, but it will only start after the 7 days trial.
Perfect. And do you get the indicators, the trading view versions when you sign up to the dashboard?
No, you get access to the dashboard. The indicators are for trading view, depending on which ones you're interested in, they have their own price point. But most of them, we currently still actually offer a lifetime license for trading view. There's no recurring fees. So there's some exceptions, but Liquidity IQ and MA Raj and also Volume IQ, we do offer lifetime packages. And yeah, check it out and send me an email which ones you're interested in. I'm going to walk you through your options there.
Perfect. And no other questions. We just had a
Great.
last minute symbol, but I think we already gone on a while with the symbols for
Yeah,
today.
that's right. Yeah. So with this, thanks, Niklas. We're going to check out your symbol. Please save it for the next session. Next time, or on Tuesday, of course. Our next webinar is already scheduled for Tuesday at 12 p.m. Eastern Time, when it is our lunch and learn session, where we will review where the market will open on Tuesday. I'm super stoked for this. It's crunch time, it's decision time in the markets. And of course, we're going to do some technical topics that need to be addressed, perhaps some strategy building, some tips and tricks, some live market analysis. So look out for the invite for this Tuesday at 12 p.m. Eastern Time. And if not, I'm going to see you all next Saturday when it is once again lunch and learn, lunch and learn power scanning session before the next swing trading setups for the week and weeks ahead. With this, guys, have a great weekend. Enjoy your time off, your long weekend, and talk to you soon. Bye-bye. Thanks, Niklas.